Welcome back. Our next guest remains constructive on the markets as indicators that he watches suggest improvements from the bottom in April could continue. We're joined now by Bruce Campbell. He's president and portfolio manager at StoneCastle Investment Management. Bruce, thanks a lot for joining us. We've just looked at the markets. We've looked at the remarkable rally in the S&P TSX Composite since early April, taking it to record high territory. The shape of the graphs looks very similar in the U.S., where the S&P 500 there's the S&P TSX Composite again. In the U.S., the S&P 500 and NASDAQ Composite have not broken into record high territory, but they're not far off it. And you, in these markets, you remain constructive. Why so?
Yeah, I mean, we look at a lot of different top-down indicators, and all of those, we got really negative, pessimistic views of sentiment back in April. We saw a lot of those technical indicators actually breaking down. Since then, we've actually seen them reverse. We saw at the same time in late April, early May, we saw several different breadth thrusts happen, which are events that happen when you go from extreme oversold to overbought. And those typically have been really positive over the next 6 to 12 months for markets.
Is there a disconnect, or why do you believe there's not a disconnect between markets based, for all intents and purposes, at record highs at a time when S&P 500 companies, many of them have withheld guidance. Companies like FedEx, which operates all around the world, points to a sagging demand environment. There's all kinds of uncertainty on U.S. tariffs, and there's geopolitical chaos in Ukraine and the Middle East. Is there a disconnect here? Are investors overly optimistic and looking through all of these things?
Well, investors have sure shrugged off a lot, right? I mean, you look at what's gone on, and if you threw out pretty much any one of those individually, you would say, oh my gosh, the market would probably be range bound or, even declining. And at the same time, we've seen, record highs on the TSX, and we're this close on the S&P, and the NASDAQ just hit yesterday. So there's a huge disconnect there. I think that, there's a number of factors going on. One is that, we have looked and we've seen, what happened with the tariffs, and they've been walked back certainly from where they were. We'll see what happens again on July 8th, right? That's when the next deadline comes. But, most investors seem to be ignoring that. But on the other side of that, we did see pessimism go to a level that was fairly extreme back in April, and it stayed there for quite some time. And then if you top that on the fact that in the last 5 years, we've seen 20% corrections. And historically, you see one of those about every 3.5 years. So we have seen a lot of corrections which have taken certainly some of the gas out of the market. So it's not like it's getting pushed to absolute extremes. In the short term here, though, we do see certainly signals where, the market has been pushed up fairly fast, and valuation is, getting up there from a historical standpoint. So wouldn't be surprised if we saw a little bit of chop through the summer.
Okay, you also look at something I see called the Zwag breadth thrust indicator. Tell us about that. It sounds like a measure of market breadth.
Yeah, so I mentioned that just a second ago. So that's from the late Marty Zwag, who was one of the sort of indicators or technical analysts who developed a lot of different indicators. And he came up with this Zwag breadth thrust, which is when the market drops down and gets really oversold and then recovers in a 10-day period. We just saw that happen. It's the 18th time that has happened since World War II. And any point in time over those other 17 that we've seen, the market's been higher 6 months and 12 months later.
Let's go to some stocks you like. You like Propel Holdings, which is a Canadian fintech company.
Yeah, I mean, they've been doing amazing things. So, Propel's been growing. Their revenue over the last 5 years has grown at just under 50%, around 46%, 5-year compounded rate. And their earnings have grown at 72%. And at the same time, they're only trading at, probably less than 12 times next year's earnings. They have a dividend that they pay out, and they've continued to increase that dividend. I think it's 4 times now in the last year that they've increased that dividend. So their cash is there, and they really use technology to go out and find new people that they can lend to, and then also really vet those people to make sure that they're lending to the people that have the best ability to pay back those loans when they come due. And they've been growing not just organically, but they've also been doing it via acquisition. So they made this acquisition into the UK, so that's a new market for them. And I think that they're going to really work in the next year to develop that market and continue, obviously, to develop the markets that they have in the US and a little bit here in Canada.
You also like a company that trades on the TSX Venture Exchange, Kraken Robotics. The ticker symbol here is PNG on the Venture Exchange. There it is now. We're looking at it.
Yeah, exactly. So Kraken, if you remember, they're in the sonar, sensor, and battery and robotics area for underwater, for marine, and they're really a leader in a lot of the different technologies that they have. And they're seeing this, big ramp up now in both defense spending and also commercial spending. And they've really gone from where they were, kind of lumpy hardware sales to where they're starting to increase their revenue and their services revenue to be more recurring. And that's really helped them. So they've been growing their revenue really well, but they've just moved into being cash flow positive. They're just in the process of raising $100 million, which will close in early July, which will give them more money for growth and acquisitions.
Let's round it out with Pure Cycle Technologies, a NASDAQ traded stock.
Yeah, I mean, it's a really interesting one. So, we have all this plastic that floats around the world, unfortunately, a lot of it in oceans, and recycling, most of it's done through chemical processes. And this company has a mechanical process to actually purify that plastic and then also to recycle it and to put it into a format that's really, really pure, so that companies like say Procter and Gamble can use it for their different packaging. They also create a film that can be used for packaging, and it's more carbon neutral than regular plastic and also more energy efficient. And they just raised $300 million from some really big investors. So Stan Druckenmiller was one of the ones. His family office was in on that. And that's to actually increase their plants around the world. So right now they have just one plant, and they've been working on bringing that up to full commercialization. Last quarter, they had their first revenue, and they're going to ramp that up over the last half of this year. And then what you'll end up seeing is that they're doing trials with a number of different customers. Those trials, as they are successful, they're going to fill up the plant capacity at their first plant, and then they'll start building more. And they've announced when they raised the $300 million that they would like to do some, overseas and in other places other than the U.S. So certainly one to keep your eye on. It does tend to be pretty volatile, though. So if you're looking to invest in it, you probably want to pick your spot, because there's a huge short interest on it. And so when it seems like those shorts will, push it and it goes down. And then, if there's any good news, the stock moves up, and that really causes the shorts to want to cover. But they constantly have, sort of like 10 to 15 days of short interest, which is a lot.